So today we'll discuss with all of them whether it's giving them good returns or not, and what the next space of consumer opportunity looks like. So before I begin, I come to you, Sumit, because you've been part of Wipro, and as a corporate, you've been investing in a lot of startup, and that too in the consumer space. So what has been your journey in the consumer space so far, and what does the next 5-10 years look like?
I think very exciting. So, I think extremely exciting, I would say. The way I see the consumer journey in India, in the startup space, in the investing space, the way to say, perhaps is one way to say is that last 10 years have been extremely active, and if $200 billion have been invested in the startup world in the last 10 years, next 10 years probably we'll see 400 billion. So that's the story that I am kind of banking on. That's the kind of forecast I am making. I think there's no looking back from a quality of startups and entrepreneurs point of view in this space. There is no looking back in terms of the VC money that is available to back these companies. I think it's just going to grow like crazy for the next 10 years.
But do you think playbook is being rewritten by today's entrepreneurs? I'll come back to you, Mr. Das, again, to discuss this further. In terms of, the new consumer startups, taking it all over in 4 or 5 years, what it would take 20, 25 years to build earlier.
What we are saying is, so if you see certain trends in the last 2 to 3 years, we are seeing companies are able to hit revenues of 200 crores in 4 years, 300 crores in 5 years, which was kind of unheard of earlier. There were a handful of companies doing this earlier. Now you're seeing much larger number of companies hitting these kind of milestones in a short span of time. The second thing we see is many of these companies are profitable. And when I'm saying profitable, they are like EBITDA positive, which by nature of a startup, one would look at, let's say, investing, maybe burning for the first few years, and then kind of, becoming profitable. But today, they are profitable from year one, which has surprised me, with growth, with scale, getting the right kind of consumer audience. Many of them are tier 2, tier 3 focused, limited set of products, but very sharp, very targeted. So just the quality of entrepreneurs is as good as earlier and improving. I think their focus is also much sharper today.
Sure. I'll come to you again. So Apoorva, I want to come to you now. You've been part of this space since, and you've seen many cycles, many decades, and you've seen the exits of companies like Beardo, Rene, and all that, and now there's new set of consumer companies which are emerging. So what's your take on that? Where are we headed, and what does the next 5 years look like?
Next 5 years, I'm looking next level of companies in consumer space. For example, looking for companies who are making global brands from India. So the latest one is my investment is Rotaris, which is a watch company coming out of India with a Swiss dial. And they are doing, they have an aspiration to make a global brand from India in the watch space. Similarly, I'm looking companies who are, maybe 100-year-old brands in the US looking to collaborate in India and establishing ventures, India ventures, because a lot of consumers in India ready to pay for affordable premium or premium. So we're looking for those companies also. We're investing in a couple of them. Then consumer financing, of course, is now, because after Snapmint and, auto financials, we realized that this could be a good space to enter more and more there. So apart from regular, consumer products or, these are new things which I'm seeing. And of course, I'm also seeing some deep tech angle into consumer business. So for me, the deep tech is not AI. For me, the deep tech is not, it's a complex engineering or the knowledge inside. for example, I'm looking companies into, who can improve the, for example, biofortified seed area. So looking companies which can create better quality products for Indian consumers by improvising the core. So more and more focus there, because now, all of you know that the paying capacity has increased a lot here. So obviously, these are newfound focus. Obviously, these things keeps evolving.
Okay. Dipanjan, I come to you. Fireside, as we all know, of course, is a consumer fund, and you have actually written the wave of consumer opportunity in India. So what you have to say about the next wave of startups emerging in this segment in the consumer space?
Yeah, and thanks, Punita, for having me here. I would just add to what Dr. Was talking about. I think the opportunities really becoming bigger given the consumption in India is increasing. So if you just take the next 5 years, and we recently did a report on the overall opportunity of consumption in India, and there is a $1 to $1.5 trillion of new consumption which is going to happen, which we feel will be driven by new age consumer brands and consumer tech companies, which means there is a massive wave of new type of companies which will emerge. Now, what we have done as part of the report and what I can share in this group is that there are 4 mega themes which we think are playing out, which will be a large part of this $1.5 trillion. One is actually the whole evolution of consumer health, right? So India is, as GDP per capita increases, a lot of health spends move from reactive to preventive, right? So I'm not only talking about nutrition and protein, but it is solving things like diabetes, mental health. So we have 7 or 8 different investments in areas like mental health, sleep health, diabetes, respiratory health, kids health. So each of these are becoming large enough in their own way, and that is something which we think will actually play out in a very big manner in few years to come. It's already becoming big. Like Traya, for example, which is in the hair health space, is now a 1,000+ crore company, profitable. So it's all happened in the last 3 to 4 years. Yeah. The second big theme is the evolution of branded spend in rural India, right? So the business models of reaching to consumers with aspiration but didn't have access. We have Rosanna in our portfolio, which is a rural commerce company, and we are seeing huge movement of unbranded to branded. India has $250 billion of unbranded loose food sales, which happens every year. So that is converting into a much more branded. So you will see a lot of rural brands coming into play in the next few years. The third is demographically, India is very uniquely positioned to be the youngest consumer in the world, right? So 25% of our total consumption is by Gen Zs. By 2030, 50% of India's total consumption will be Gen Zs. So they are redefining what they want for them as brands. So the third big theme is the Gen Z first brand. So whether it is BPC, health, food, fashion, a lot of it will have to remodify or repositioning themselves to appeal to the Gen Z. So that's the third big theme. And the fourth is really technology and R&D and innovation-led R&D. Like how Atomberg did in the whole electronic space, we are seeing many such brands which are innovation first. Companies like Beyond Appliances, Sleep Company, which are really innovating in the material bioscience, as Dr. Apoorva talked about, in the health space. So it's real R&D and innovation-based products, which can be for the globe, but also it is serving the premium part of the market. So these are the 4 themes which covers the whole aspect of where India's consumption story is evolving.
Okay, sure. I'll come back to you again. So before that, I want to come to you, Sibabrata, because you started in today's market, wherein consumer demands are, of course, different. They are looking to try something different. They are looking for better premium products. So do you think the current generation of consumers has actually helped you in the success of Atomberg? I mean, apart from, of course, the zeal and...
I'm going to share it. Just repeat the question.
Can you hear me? So Shibrata, I'm talking about the new age of customers which are coming in today's time. Do you think that has got to do with the success of new age brands like Atomberg, which are coming to the fray now?
Yeah, no, thank you so much for having me here. You will not believe, but our PR team pushed me to buy this formal suit 2 days before. I usually don't wear formals. I'm slightly uncomfortable. But I think to answer your question, look, over the last 10 years of time, right? We have seen multiple segments of TG evolving. But I think now is the best time to build anything around product innovations, right? So I think if you want to build a consumer brand today, you should build with a product-first thought process. And that as a philosophy has really worked well for us, right? I mean, even if today, if investors asked us, what is the difference between you and the incumbents? Our immediate response is, we are not a distribution-first consumer company. We are a product-first consumer company. And when you build a product-first consumer company, then whether the TG is new age, whether the TG is old age, I mean, that's just a function of which TG you want to prefer. But yeah, I think you should just identify a segment, and for that segment, you should build a company with a product-first approach. If you do that, now is the best time to build a consumer company in India. The market is growing like amazingly well. Just to give you a reference, when we started our journey like back in 2015, crossing 100 crore was a big milestone. Today that has shifted to 500 crore already, right? So I think that market is becoming large. Any segment, premium, rural, tier 1, tier 2, Gen Z, old, everywhere there's an opportunity. You just need to identify the segment and really solve and obsessed about solving one fundamental problem for that segment. If you do that, I think the market is very, very rewarding.
Okay. Sure. So I would again come back to all of you investors and ask you, okay, you've seen the first set of consumer wave happening. So now what's next? Are you seeing these brands becoming big, whether they are going public, or you see some kind of acquisitions happening in this market? What is the next segment? What kind of consolidation is taking place in the consumer space?
So you're talking about the new trends? Okay. So of late I've observed that this is a new thing. Private equities from US, they are buying Indian consumer companies. And I was lucky in the last 6 months, 2 acquisitions, PSafe and True Native. Both of us, we sold to US private equity. This is something new, and I think all entrepreneurs should know that, because these avenues were not there. And even deep tech companies are also buying Indian companies. So especially, I'm just talking about the private equities. And that was something new I recently discovered, that this is also possible. Learning for us.
Okay. Sumit?
I think the current trend and what is going to come perhaps is a mix. And I think all options open. And as the doctor just mentioned, there are Ps who want to kind of take control deals in the startup world. IPOs are happening as we see, and more of that will happen. M&As, consolidation, absolutely yes. And we are also acquirers, so we keep looking at good companies which fit our investment thesis, our category thesis. So most of the large companies are open to acquisitions, and so that M&A is a big route open for companies. So I would say whether it's financial, IPO, strategic, all options are going to play out in the current and the recent future.
Okay. Dipanjan?
Yeah, I mean, nothing significantly different than what they said, but I will just add one aspect. Taking a leap of what Shibam was saying, that the genuine innovation factor of some of these companies are changing, and what the strategics are looking for is a differentiating strategy and a differentiating product. So even Sumit mentioned that Wipro is also very actively acquiring companies, but the lens have changed as per what we see from what used to be just addition in the basket of what strategic look for versus seeing pure differentiation, right? And the reason for that is that the consumer base is changed. And because the consumer base is changed, the existing large companies are finding their core products not appealing to the new demographic of India, right? So whether it is Gen Zs, whether it is the millennials, so there is a genuine gap between what companies' current product portfolio is, including likes of ITC, Wipro, Unilever, versus what the consumer is demanding. So either they have to revamp their existing product portfolio, or they have to look for new companies who are innovation first, who are product first. And that is giving rise to different opportunities apart from the private equity market and the IPO market deepening. So it's a great time even for venture capital investors and founders to monetize the value which they have created over a period of time.
So two additional points, Dipanjan, to what Dipanjan is saying is, one is, as a strategic, we are willing to pay a certain strategic premium to differentiated companies. And I agree with him, and that's the way we are looking at innovative companies. The second is, clearly large companies are still not in sync with new consumer trends. For example, there is a set of consumer, whichever Gen, Alpha, Z, I don't know, but younger folks who have never shopped offline. No, so typically we do online shopping as well as offline shopping. There is a set of consumer who are all online shoppers. And as large companies, we haven't really understood that game yet. So we would look at, maybe startups or scaled companies who are good at it, who channels are such that we can learn from them, leverage into our current business. That's something that we are really wanting to do.
Okay. Sure. So, Sibabrata, I'll come to you. I mean, you are experimenting with all kind of retail models for your brand. So, I mean, is the new age consumer more open towards the online segment, or consumers are again going back to physical buying? How has been the response for Atomberg for you?
You're asking whether new age consumers are buying our product?
Channels.
Okay, that way. Yeah, slightly difficult.
Is it? Oh, okay. Okay.
I think I understood your question. You are saying that whether the new age consumer is buying online, offline, or a mix. Is that the question? Yeah. No, I think one of our learning that has happened in the last 10 years is that at least in our category, which is very involved in nature. I mean, you don't buy an appliance just like that, right? You actually do a research about it. Sometimes you actually see the physical, how it looks like. You worry about warranty. There are too many parameters to consider. So when a category is involved, in those categories, we have seen that the journey is very omni-channel in nature, right? So, and hence it is very important for you to have both online and offline if you really want to scale up. So maybe by staying only online as a channel, if you're just present in that, it is good enough for you, for you to, let's say, scale to a certain percentage of the market, maybe 1 to 2% of the share. But if you really want to become large, like cross 1,000 crore, 2,000 crore kind of top line, I think offline is very, very relevant, at least in the categories that we are present, which, in my opinion, are very involved in nature. Having said that, I think what is very important is that maybe the ratio, for example, is still, let's say, 90-10 or 80-20, depending on which category we talk about in terms of market share by offline or online. But what is important is that whether the consumer is buying offline or buying online, 60% plus chance that he will discover your brand online. So digital, not only in terms of sales as a channel, but digital in terms of media as a channel has become a lot more relevant today. So yeah, I think my answer to is this, irrespective of, again, TG, whether it is new, old, that doesn't matter. You have to be present omni-channel when it comes to scaling up the business. But your thought process has to be digital first in now, at least in today's time. When it comes to media and the entire marketing journey, but on top to bottom. I think that's what my view is today.
Dipanjan, are you also seeing any new business models emerging? Because there was a time when we were seeing Amazon first companies being built or Insta first companies being built. So any new business models which you foresee?
No, totally, and totally agree to what Shibam said. So, there was a time where online or D2C was the word, which meant selling from your website.
Yeah.
Then it was selling on e-commerce. But I think genuinely today consumers are, the channels are consumer backwards, right? So there are at least 7 or 8 different business models within the consumption. So we have a company like Sleep Company, which is very similar to what Atomberg is doing, which is purely omni-channel, where discovery is online, but sale happens offline in the EBO stores, right? There is classic FMCG model, which is online plus offline. Quick commerce has changed the way food companies are actually scaling today. So it is actually built with a brand first approach, selling on quick commerce. Then there are health tech companies which are online only, like Traya, because the consumer's ability to use technology and interact with the brand online is much better than offline. Then there are companies like Gynoveda, which are offline only. It's a fertility clinic, right, which actually requires a consultation approach. And product and services are come together, right? So it is more of a solution a consumer is buying. It is no longer product or services. And even with the advent of AI now, services companies are scaling faster. Like we have seen, of course, Urban Company, and there are a bunch of other services companies which are coming in, which is now significantly more scalable than what used to be earlier. So we have invested in a company called Sports for Life, which is a sports academy business, which is using vision tech and AI for standardizing curriculums and sport curriculum, which was again not possible earlier. So if you therefore think about from a consumer lens backwards, what they are looking for is a solution. They're looking for a service, they're looking for a product, and eventually it has to solve a problem for them. How it is delivered today has become significantly more matured than what used to be earlier. But online and digital plays a very important role for discovery. And then the actual endpoint delivery is based on what sector, what segment, and what product you're talking about. So it's a very different world today than 7, 8 years back when it is to be a D2C company or a e-commerce first company.
Okay, interesting. So, Sumit or Apoorva, do you want to add anything to this?
Frankly, Dipanjan already covered that. Today, nothing is possible without omni-channel. And rather, entry for this consumer company has become easy because of the quick commerce platforms give them enough, numbers before they go into offline or retail or whatever, So that is, the markets are completely changed after this entry of quick commerce platform. So most of the companies, they're able to start sales. They reach 200, 300, 400 crore kind of revenues. And after that, they sort of experiment, which is a tougher thing for them, is an offline. Which is a trend, but frankly, a lot of them just want to still focus on online only. Because today, the penetration is so high, and people just want to take reviews first, and that's available online. So I'll say, guys, beyond a point, a company which is just doing online, not able to survive. They have to go offline and also omni-channel, I'll say. And beyond a point, a company which is just offline, starting, and then they can't sell, they can't grow if they're not coming. So it has to be omni-channel. It has to be omni-channel now.
Okay. Sumit?
I mean, I have a company like Rene Cosmetics. They sort of started online first, but after that, after 400 crore revenue, they had to shift their strategy, and then now they're growing offline also. So it's not possible now just to stick to one strategy.
Okay. Sibabrata, I would like to come to you again for since you said that, okay, Atomberg is a deep tech consumer brand which you are building. So tell me, how is AI actually shaping the things in the way you develop or sell, or probably in terms of the kind of consumer data you would be getting for your brand?
Yeah, no, it's a very interesting question. I mean, and very relevant one in the current frame of things. So, I think AI definitely has a lot of role to play, and I tell you different buckets of how we are looking at it, right? So we actually have built a center of excellence for AI a year back, and what we did is that initially, most of the companies like us, like consumer deep tech companies, which are like most consumer engineering side of. So we always had a lot of strengths around engineering part of the things, but like the software tech, the website, etc., was always outsourced. So immediate benefit of AI is that now you can build a very agile small tech team without spending a lot of capital. And because of that, we had an immediate savings on very small things like website outsourcing, etc. So that was the first phase of things. Now, because of AI, there are multiple. I mean, the second layer of bucket is what was not possible before AI. For example, every day we listen to 100+ consumers because of after-sales service issue, or it can be like pre-sales, etc., etc. Right? Now you have recording of those. Those voice calls. Now it was impossible pre-AI area to analyze those calls and take actions. Now we have developed applications to analyze those and draw consumer insight and act on it. Right? So this is just second bucket of applications where because of AI, a certain thing is not possible, which was not possible before. And the third bucket is which I am more bullish on. I mean, if you look at from AI benefit, one is of course the cost, efficiency. That one part is there. But can you really leverage AI to grow faster? Now, how a company like us will grow faster? We'll grow faster by, let's say, launching a product sooner. Instead of launching one product, maybe we can launch 2 products. For example, on the sales and marketing side, for example, today if our sales team is visiting one counter, he will not have an idea to what to exactly pitch. You have 100+ SKU and range, but a counter will only sell 5 or 6. Now, which 5 you should pitch to him so that his liquidity goes up, right? Now, all of these initiatives will eventually help you to increase and grow the revenue faster. So I think we are more bullish on multiplying and focusing on revenue growth rather than cost optimization. The cost optimization is anyone and everyone will do. But if you can really leverage AI as a technology, you should focus on revenue growth, and you should focus on things which were not possible because of AI. Before AI. Is what I think, So yeah, I think for us, we have just to summarize, we have built one center of excellence where we have incorporated a team. We already have taken few low-hanging fruits like website, etc. in-house, which has given us or freed up more budget, which is utilized for applications like analyzing calls, etc. And then the third is now growing up the revenue. But extremely bullish, and we have seen this because as a company, when we were growing in 2015, 2016, digital was a similar stage where it was, people were just adopting to online. Online was very niche at that point in time. But because we took that early bet, and hence, over a period of 10 years, now that became our capability that we were competing against the incumbents. So I think for new age startups like us, you should just ride on that AI wave and try to contextualize for your company. I mean, you have to do that for the industry, for the company, and then just figure it out.
Okay, interesting. So a last question for all the investors in the panel before we throw it open for our audience to ask questions. So if you get a pitch from a startup which is doing 50 crore in revenue and it's profitable, would you invest in that? Or a company which is like a 500 CR revenue run and still burning cash a lot more. So which one would you pick?
Both. So I'll pick both. So obviously it depends on various other factors. Is it making a mark in the market? How is the consumer story, acceptance? Is it unique, innovative, founder quality? So if these things don't work in let's say 50 crore profitable company, I will not look at it. And I know if it works in the other one, I'll look at it. It's about assessing the company on its own merit, whether it's early or late stage. And the point about fundamentals of a business is important. And if it's what we do, our thesis is such that we don't look at very high burn companies because we feel that fundamentally we have to look at unit economics in a much closer manner. And we pass companies which are high burn, whether they do 50, 100, 200 or 500 crores. So it depends on the, we look at innovative companies which are making a mark, have a good consumer acceptance, which can actually scale. We'll certainly look at them.
Okay.
I mean, it's, frankly, if you're growing, the company is growing, see, I'll tell you, up to 1,000 crore valuation, the companies are mostly not profitable, right? There are few, I mean, we have portfolios, we have a common portfolio also, but that's surprising. But there are outliers. But it's understood. Second, if the company is growing 50-60% year on year, it's near to profitability, it is good company. If the company is growing 100-150% year on year, the beta negative or PAT negative is understood. So, it all depends whether their product is creating a magic like what I'm seeing Atomberg is doing. If they're doing that magic, everything is understood, So things are controllable, you on a point. So guys, as an investment thesis, you look at companies, entrepreneurs are different, all of them are different metals, Some people want to go 50-60% growth, want to continue to have profitable because they know the Indian market is, and global, we have seen 3 black swan events in the last 6-7 years, right? So, markets keep going down, up and down, and equity also keep coming and down. So, it's, smart entrepreneurs sometimes, they just want to go that way. Like, for example, my company, IGP, India Gifting Portal, right? They've been growing 60-70%, but they're now profitable, right? Okay. At a revenue of 600 crore kind of. They were somewhere around -5%, -10% negative for quite some time. But looking at the market fluctuation and again, latest global event, we did, so we're happy with that. But and even the future investors happy with that, right? We're coming. But there are disruptive places, there are companies who are growing 100%, 150%. And it's understood that EBITDA is -10, -15, it's okay, So I'm saying, you have to see what business you're investing, first of all. And, what is and you have to see these parameters within boundaries. And I'm sure all the venture capital people, they know those limits already. So that's a brief about it.
Okay. Dipanjan?
Yeah, I would just add that there is a nuance on the burn. So we look for unit economics positive to be a very important part, right? And if a company is innovation first, able to charge a premium, so it should have high gross margins and and a unit economics positive. We see a lot of companies who are unit economics negative to start with, but they have a clear path to unit economics positive. That is still okay. But if the unit economics is not fundamentally positive, then I would say we have never invested in those companies. And in today's world, it is even more tougher. If the burn is by investing in people, in R&D, in your balance sheet, working capital, store, capex, manufacturing, these are all building for the future, right? So that is absolutely fine, and that's the right spend or the burn. But spending marketing monies on Meta to gain consumers, which you don't know whether they will come back, that cycle which used to happen back in the days, I think that's not what is relevant today. So that's the nuance of unit economics burn versus overall burn.
Okay. Quite fair. Okay, Sibabrata, if you want to add further to it in terms of what was your pitch like when you got your first check?
What was our pitch? No, I think
For
we
the
tried
first
to-
check.
Huh?
For the first check.
For the first check was easy. I think difficult one was when we are raising our Series A round, and I think we did all the. Back in 2017, right? We wanted to build a consumer company that to in a hardware product. I remember I called an investor without naming him, and I said that we are going to own manufacturing, and he literally switched off the phone, right? So all of that has happened back then, but I think it was difficult in those era to convince investors that you can actually build a brand with a manufacturing product innovation first, right, and challenge the incumbents, and also can go into offline. So our ask was, our pitch was tough, and I remember because Fireside is here. So we went to almost 7-8 ICs, including Fireside, but we couldn't convince them. Eventually couldn't convince them that you can actually build a brand. It was hard, and but what we did not do is that we did not change our pitch to suit what investors want to hear, and because of that, we had to face a lot of rejections. But because of that, we also got the investors who believed in our story. And one of the things that has really happened well with Atomberg is that we got a board which is aligned like anything, right? And that has really helped us. We have heard many stories of a board dominating, although nothing has happened for us. We took bad saying that we'll go offline. The boards were supportive. We decided to go one category first deep. The board were supportive. We wanted to go manufacturing deep. The board were supportive. Yes, it was hard. We had to face many near-death experiences. There was one time where we actually literally were thinking to shut the business in a month. But eventually, we got investors who we really, really wanted. So I think my only request is that if you're listening now, the recommendations will keep changing based on when we're speaking. But do not change your pitch because what investors want to hear. You should identify what is the right segment of investor based on your industry, but you should really hold on to the belief that you have, and that's what I think is my only addition to what all of them have said.
Okay, great. So we conclude the session here. Thank you so much to all the panelists for sharing your playbook in terms of consumer returns and building a consumer startup in India. Thank you so much for joining us today.